this is Raman, your tutor from Alberta Real Estate School. Today we'll talk about GDS ratio. GDS ratio is something you need to know for your mortgage exam. This is one of the debt service ratios that the banks will look at when they are qualifying somebody for the mortgage. GDS ratio includes the housing costs. So let's dive in. Let's take a look at how to calculate the gross debt service or GDS ratio. So what is the gross debt service or GDS ratio? The gross debt service ratio is a measure of the housing cost versus a borrower's gross income. So this is one of the calculations that the lenders will look at to see how much of the person's gross monthly income is going towards covering the housing cost. This is an important affordability calculation that the lenders will use to see whether the person qualifies for the mortgage or not. So what does the GDS ratio include? GDS ratio includes principal, interest, property taxes, as well as heating costs. If the property is a condominium, then we will include half of the condominium fees as part of the equation as well. Let's take a look at the GDS formula. GDS formula is principal plus interest plus property taxes plus heating costs plus half of the condominium fees if the property is a condominium. Otherwise, we will ignore this, divided by gross monthly income of the person. The GDS limit for most of the lenders is around 32%. Some lenders will have more leeway and they will allow a higher GDS ratio, but 32% is the benchmark that we will use. Let's take a look at some of the practice questions. Question number 1. Jen and Jason Smith wish to purchase a house subject to financing. Their combined yearly gross income is $84,000. Their monthly mortgage payment is $1,250.75, which includes principal and interest. Their property taxes are $1,800 for the year, and the monthly heating costs are estimated at $100. Would the Smiths qualify for the mortgage? So first off, let's start off by taking a look at our variables. So in this case, the gross household monthly income, in this case, the yearly income is given, so we have to convert that to the monthly income. So the yearly income is $84,000, so that's for the year. So we will divide that by 12 to arrive at the monthly income. So in this case, the gross household monthly income will be $7,000 for the month. The mortgage installment payment, which includes principal and interest, is at $1,250.75 for the month. Property taxes are at $1,800 for the year, which means $1,800 divided by 12 to get the monthly number. So we have $150 a month for property taxes. And then the heating costs are given to us for $100 per month. So in this case, it's not a condominium, so we don't have to worry about condo fees here. So again, the formula here is PITH, so principal, interest, property taxes, and heating costs. And we divide that all by gross monthly income. All right, so the first step in the calculation would be to calculate our PITH, so the total household expenses. So the first one here is principal and interest, which is the mortgage payment of $1,250.75 plus $150 we have for our property taxes, plus we have $100 for our heating costs. So that gives us $1,500. So $1,500.75 for our PITH. So those are the total housing expenses. So in this case, the next step here is to divide this number by 7,000, which is our monthly income, and we get 0.214. So this is our GDS ratio. So we multiply that by 100 to get our ratio, which is 21.43. So approximately 21% is our GDS ratio here. So going back to our screen here, the calculation would be our monthly housing expenses would be PITH, which is $1,250.75 for the mortgage, plus $150 for taxes, plus $100 for heating costs, which gives us $1,500.75. And then step 2 is we divide that by our gross monthly income, which in this case is $7,000, and we get 0.21, which gives us the GDS ratio of 21%. So overall, our GDS ratio here is 21%. Let's take a look at another question. Carol is interested in purchasing a condominium property as an investment. She's an investment banker and her income is $120,000 per year. Carol's monthly payment for the mortgage is $1,050, including principal and interest. The property taxes for the condo are $1,200 for the year. Her monthly condominium fees are $200 per month, and the monthly heating costs are estimated at $75 per month. Would Carol qualify for the mortgage? So let's take a look here. So first of all, let's look at our variables. So we have here gross household income in this case is $120,000 for the year, which means $120,000 divided by 12, which is $10,000 per month. Her mortgage installment payment would be $1,050, which includes principal and interest. Then we have property taxes at $1,200 per year, which means we divide this by 12 and we get $100 per month. The last one here, condo fees, we have to take this into account as well. So we will add half of the condo fees. So in this case, $200 a month will be our condo fees. We divide that by 2 and we get 100. So our condo fees will be 100, and then heating costs, we have $75 per month. Now let's take a look at the calculation here. All right, so in this case, our PITH would be, first of all, our principal and interest payment would be $1,050. So $1,050 per month will be our mortgage payment. Plus, we have property taxes of $100 per month. We have heating costs of $75, plus half of the condo fees, so $100 for the condo fees. So our total here would be $1,325. And then we divide that by our gross monthly income, which in this case is $10,000. And we get 0.13. So multiply that by 100 and we get 13.25. So that would be our GDS ratio here. So going back to our screen, the calculation here would be PITH, which is $1,050 plus $100 for our property taxes, $75 for heating costs, and $100 for our half of the condo fees. That gives us a total of $1,325. We take that number and we divide that by our monthly gross income, which in this case is $10,000. And we get 0.1325. We multiply that by 100, and our GDS ratio here is 13.25. So in this case, the GDS ratio is less than 32%. So she will qualify for the mortgage. In both of these calculations, we saw the person qualifies for the mortgage because their GDS ratio was less than 32%. So that's it for now. I hope you enjoyed this video. If you would like to get some help with passing your Alberta real estate exams, I invite you to visit www.albertarealestateschool.com, or you can give us a call at 587-936-7779. We have study guides, we have exam prep materials, we have video courses for you. And if you would like some hand-holding, we also have scheduled training classes. So that's it for today. I'll see you next time. Bye for now.